Hello and welcome to this third part of the series Investing Not Rocket Science. In the first part, I defined a portfolio framework, I defined the objective of the investment portfolio and the strategy and a time horizon of greater than 5 years. And I selected a suitable benchmark, which is the MSCI Investable Market Index. From there, we looked at the US markets initially and considered the mega caps Amazon, Apple, Google, and Microsoft. After a quick evaluation, I added Google to the portfolio as the first purchase and put the other three on a watch list to be looked at a later point in time. In this video, I'm going to look at and evaluate engineering and automation stocks. This particular sector is likely to do well over a long-term period for the simple reason that as technology improves and automation increases, these companies are likely to generate more revenues. The stocks that I'm looking at are Siemens, Legrand, TE Connectivity, and Emerson Electric. Okay, let's dive right in. Once again, we're looking at the market cap in blue and the top line revenue in green for the 12-month trailing period. You can see that Siemens is the largest company among the four and is trading at about 1.5 times its revenue. Comparatively, Legrand is trading at about 2.5 times its revenue, and TE Connectivity is trading at about three times its revenue, and Emerson is trading at about 2.5 times its revenue. Okay, going by this, obviously Siemens looks quite attractive in valuation. Now let's look at the last item here on this graph, which is net income to common shareholders. I see that Siemens is at about 3.8 billion of net income in the last 12 months. Legrand is at about 1 billion. TE Connectivity is at about 2.2 billion, and Emerson is at about 4.7 billion. So while Emerson's a much smaller company compared to Siemens, it's definitely given out more net income to its shareholders. That makes Emerson my top pick among the four at this point in time. Okay, moving along, let's look at debt to equity. I see no real danger anywhere here to any of these companies, neither with the degree of financial leverage. They're all approximately 1. Siemens is slightly leveraged slightly higher, which means that in any economic downturn, it would probably impact their net income more than the others. Return on assets, return on common equity, again, we see that Emerson is leading the way with a 26.8% return on common equity. Okay. PE ratio, Siemens is at 32.4, Legrand is at about 22.9, TE Connectivity at 18.6, and Emerson at about 17.7. Once again, TE Connectivity and Emerson are, in terms of valuation, are much better than the other, than Legrand and Siemens. In terms of PE growth, PEG ratio, I see that Emerson and Legrand are the only two which have grown have shown growth in their price earnings, in their PE ratios. Okay. Moving on, let's look for some trends. Revenue growth. I see that Emerson is on a rising trend since the mid of last year in terms of revenue growth, and it's currently at about 15.2%. And there's also Legrand, which is on a rising trend, which is at about 19.2%. The other two, Siemens and TE Connectivity, have declining revenue growth, and this could be a concern in the future unless this trend were to change. I would normally not look at, unless it's really attractive on valuation, I wouldn't look at stocks with declining revenue trends. Okay, EBITDA margin. Siemens has the lowest EBITDA margin here, and The other three are in the range of 22 to 23%, with Legrand and Emerson again having increasing EBITDA margins just like their revenue. This is not surprising. While TE Connectivity is declining in EBITDA margins and Siemens is about flat. Okay, inventory. Siemens has the largest inventory, again, not surprising for the size of its company. Uh, while the other three have flattish inventories. Nothing of real concern. Siemens inventory is rising. That is something that we need to look at. Capital expenses is also rising for Siemens, while for the other three companies, they are pretty much flat. So no surprises there. Interest expense. This is an interesting chart. You see Siemens interest expense is rising, and this trend is continued to this is going to continue. As interest rate rises, their interest expense is going to rise, and that's going to eat into net income. So this is obviously a concern when I consider Siemens, while the other three are pretty flattish on their interest expense. Emerson, and but still rising, primarily due to the current interest rate cycle. Cash from operations. Siemens, we see a declining trend in cash from operations, and we see Legrand is doing pretty well with cash from operations as well. It's kind of bounced up in the last couple of quarters, while TE Connectivity and Emerson are both flattish on cash from operations. Okay. Let's look at some fair value assessment using the DCF model. Discounted cash flow analysis, I'm using Investing Pro, and the upside potential is the highest for TE Connectivity at 16.5%, and Emerson comes in next with 6.1%. Okay, while Siemens and Legrand are already trading above their fair value assessment at this point in time. Okay, so we have a short list between TE Connectivity and Emerson, considering what we have seen so far. However, I think I would choose Emerson between the two because Emerson has rising revenue growth and EBITDA margins, while TE Connectivity does not. Though I am not completely convinced about Emerson yet. So this is the graph, and all of them have performed relatively similar. Siemens having outperformed the other three, probably because there's a lot of buying interest from larger funds. So this is what I think I'm going to do. I'm not going to take any portfolio action based on this evaluation. I'm going to put Siemens, Legrand, and TE Connectivity in the watch list for a later time. But in the next video, I'm going to look at Emerson and evaluate it with some other stocks from the same sector, such as ABB, Schneider Electric, both from the European region, and Rockwell Automation. Okay, so that's what I'm going to do. Thank you for watching. This is Investing Not Rocket Science, a series on building and managing an investment portfolio. None of this is expert advice. I'm just learning alongside you. You can connect with me on LinkedIn, and please read through the terms on our website. Thank you very much for watching, and I look forward to seeing you in the next episode.